Welcome to this week's Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. Better cash than expected, wholesale retail spreads, corn versus cattle market, and a notable drop in the beef cow slaughters. Just a few of the things that we're going to hit on, which is made for an interesting trading week this week as Brad Kooima joins us. He's with Kooima and Varlick out of Sioux Center, Iowa. Let's talk about better cash than expected. You know, we thought we had some decent numbers in the last couple of weeks, even in the ebb and flows. Nice to see the North still doing well.
Yeah, for sure. I will take it every time to be wrong that the market's better than I thought it was going to be. I was a little worried that we're going to start to see some of that price erosion. You know, the South is trading at such a steep discount to us here. And, you know, they are largely basis traders. And with the basis the way it is, the June at a very, very steep discount to cash, almost record setting. That usually has a tendency to drag the cash market down. So I don't know if we're quite steady, but it's pretty close. There was some 230 to a major yesterday and a little bit of it again this morning. There's a little bit of 144. Last week, a lot of us got 145 to 6. So it's a little softer, but it's a little bit better than I expected. So that's encouraging. It'll be interesting to see whether we get convergence at all this time with the June contract. Don't forget that the way the delivery system is set up, Susan, is flawed, in my opinion. They allow you to deliver cattle, like something like 12 business days after expiration of a contract. So that literally means with the holiday that you can deliver cattle up into the middle of July. Theoretically, June cattle are guessing what the cash market's going to be in the middle of July. Then it doesn't seem like that's really what this contract was set up to do. But hey, they don't ask me, right? So.
All right. Speaking of not asking you, I just got a news release that just came from Senator Tester's office and says that he is questioning and putting pressure on the Ag Secretary when it comes to meat consolidation legislation. And I have had this conversation many the time. Do you want to share your thoughts? And is it going to have a effect at all on this market trade? As you chuckle.
Wow. Well,
loaded question.
Well, yeah, and anybody that knows me knows that I'm advocate for the independent cattle feeder, right? Some of this topic has been broached before about what do you do with an oligopoly that controls 85% of the beef trade, of the beef business, I should say. It's very, very dangerous. I expressed that to senators and representatives themselves. So you got a weird industry that, I'm generally a conservative small government guy, but when you have this much power in the hands of so few, it would seem to me like it's something that needs to be more closely watched. So this idea of breaking up the big four, wow, wouldn't that be something? I mean, it's been talked about, in the bar, hoping and wishing and wondering. And frankly, I wonder in the short term what that would be like. I think that would be there would be some big time potholes there for a little while. Perhaps the long-term benefits of something like that would outweigh the short-term issues, but it would certainly create some stress. If nothing else, what happened 2 years ago when the NCBA tried their voluntary to mandatory approach, the awareness and the Packers actually grew a conscience, for some of them did, for a while there, and for fear of reprisal, I think did participate a little bit more in the cash market. So, any kind of pressure that's put on them is okay with me.
I know that he said that I'm not for putting anyone out of business. What I am for is adding more competition to the marketplace.
Well, I like that. How about let's not put any more cow-calf guys and little guys out of business too, right?
Yep. Exactly. So now we'll divert back from the fork in the road to talk a little bit more. Sorry, it came up. I had to ask. Box beef market, as we look at the way the boxes have been trading, obviously some choppiness. Can that all be tied back to not only hotel, but retail supplies and what we're seeing?
Well, I think it's certainly part of it. It's probably good that you bring it up when we talk about it a little. We're having a little bit of a contra seasonal problem here. Normally, right ahead of Mother's Day is a lock. I mean, boxes go higher. And led by New York strip steaks. If you didn't know, I mean, that's the biggest weekend for that there is of the whole year. But the beef trade has been just okay here the last little while, and I think here, pardon my unprofessionalism here, but so the blue line is retail, the red line is wholesale. Notice the divergence. So the blue line is way up there in the rafters, right? So in other words, now, I guess I'm going to be guilty of making another enemy, but now it looks like it's the grocery stores, the big box deals, the Costco's, the Walmarts, the whatever. Pick your poison, Hy-Vees. And that seems to be where some of the discrepancy is, and they're wondering why they can't sell $6 hamburger. I would say, well, maybe don't price it at $6.
Mhm.
Obviously, people are going to say, well, that's just an oversimplified approach. Well, maybe it is, but it doesn't seem to me like the levels that so if they've got too much stuck in that meat that they got to sell at that high, that's not my fault. Nobody cares where my fat cattle break even at. They don't guarantee that I'm going to make money on it either. So let's get this stuff priced in line. This excuse that, well, it's inflation, whatever. I'm tired of that. That's it's either COVID or inflation, right? That's the blame for everything.
So are you almost done with this whole fun selling for a while?
Finally, June cattle, hallelujah. Last couple of days, I think the last 2 times we did cattle call, I was, being the, gloomy Gus here with, we got a lot of fun selling, got to come, and so we've had a lot of it. So I think we're about to the end of that trail here. This is the 4th day of the Goldman roll, and you can see what happens when the fun selling relents. The June had a nice update today, up over $1. We were even better than that for a while. So I do look for the forwards to kind of gain a little bit. They ought to anyway at a discount to cash like they are, and maybe stabilize the thing a little bit. I would say, though, that I think we've got an awful lot of heifer calves on feed and steer calves, but I mean, the difference maker in the balance of supply is all those extra females on feed. And we got to work through that this summer, and we will. And I don't think the low this summer is going to be nearly as bad as what some people think. And then we can look forward to the 4th quarter and the 1st quarter next year being a lot more supply side friendly, I think.
Well, they always say rain makes grain, but I think rain is making for some greener pastures, which might be slowing down some of our beef cow slaughters.
For sure. We referenced that early, that we've seen a lot less beef cow slaughter. And I think, and they're through that terrible storm system. Some of those people in the Dakotas, North Dakota in particular, lost a lot of calves, and that brought a lot more beef cows to market as well. It's been noticeable though for the last 2 weeks, the beef cow slaughters dropped. So that's our first key thing to keep an eye on now. Hopefully those guys keep getting timely rains, keep getting that grass going. And then when we get to this fall, we'll see if they don't decide that, hey, we're going to hold back some of these heifers and not send every one of them to the feed yard like they did last year.
All right. As we wrap up, let's talk real quick about this corn versus cattle market.
Yeah, today we got pretty whippy right at the end there, just as you and I were prepping to go on. And of course, that higher corn is bearish feeder cattle. Although if you went to a sale barn the last week, you might not have noticed it. I thought these cash feeders were really, really strong the last week or so. But futures certainly respond to that. And that did not help our back end of our fat cattle market either today with, feeder cattle futures almost $2 lower. I am not necessarily, I know we're talking cattle, not corn, but I kind of feel like the corn, this is the time of year where you make a high. I think we'll get it planted. I get it. It's dry in India and there's Ukraine and all the rest, but some of that we knew about for quite a while already. So I'm really not thinking the corn's going to run away from here, at least not at this point.
All right. Sounds good. Thanks for joining us this week, Brad.
Welcome.
And that has been Brad Kooima joining us. Just a reminder, folks, commodity futures and options involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.